Welcome to Beyond Bitcoin, a podcast about all things digital assets, the global communities they are creating, the generations that are using and investing in them, and the challenges faced by the nations that are seeking to regulate them. The content of this program is not to be taken as investment advice. The opinions expressed in the program by the host and the guests are their personal opinions only. Remember, feel free to subscribe and share with like-minded friends. My name is Derek Graham. I'm the CEO of Portal Asset Management, and my co-host is Nitin Gower, Managing Director of State Street Digital Assets. Good morning, good evening, good afternoon, wherever you are in the world, and welcome along to another episode of Beyond Bitcoin. In fact, our first episode for 2023. Nitin isn't with us today because he is swanning it around with the VIPs at Davos, and he will therefore be giving us a live pitch next week from Davos and giving us an update on exactly what's been happening there. But we have a special guest with us today, Mark Seidel from Alternative Investments and the Alt Alpha Strategy, who's an alternative investment manager based in Switzerland. Hey, Mark, how are you?
Hi there, I'm doing well, and hello everybody else spread across the world. Doing well, thank you.
Terrific. Hey, it's been a little while since our last podcast, so I'm going to give a few people an update on what's been happening. The last time we did a podcast was released on December the 15th, and since then, important things have happened. I've caught a number of fish, some of them are reasonable size. I've got quite sunburnt, and I was pretty happy with the size of one of the larger fish that I caught. That's about it. Of course, family and presents. And as Mark and I were laughing together before, we were in Perth in Western Australia where the temperature was around 30 to 36 degrees Celsius. And as we gathered together as a family, we of course sang great songs like Dashing Through the Snow in a one-horse open sleigh. But in fact, where you were, Mark, there was a bit of snow on that side, wasn't there?
Yeah, although also here, since we were talking, you have families spread across, so we had different Christmases. On actual Christmas Day, it was also a bit green, a bit gray, so the Christmas spirit lacked there. But when I had Christmas with my family, at least then there was one event where we had, enough of snow and the spirit was going through. So yeah, I can't compare it, to your side of the world, but what good for you that you also caught some fish.
Yeah, very good. Hey, wouldn't it be great to be able to have just a small air conditioning conduit that takes minus 20 degrees Celsius in Switzerland and pumps it into plus 36 degrees in Perth, so it cools us down. But at any rate, starting off, this year was quite extraordinary because, when we were last talking in December the 14th, the market was sitting at 5,998. Now that's the CCI 30 index, and it's now sitting at 7,422 last time I looked. So that's an increase of nearly 24%. So just this year alone, the market started off with a rally of 28.44%. We think driven by improvement with the macro as a primary driver, with the slowing inflation, the inverted yield curve, and supported by some very positive news in the cryptocurrency world, such as Amazon's web services partnering with Avalanche to scale blockchain solutions for both enterprise and government. Quite extraordinary, really. And El Salvador passing a law allowing Bitcoin bond issuance, as well as Ondo launching tokenized US Treasury bonds targeting the $100 billion stablecoin marketplace. These are all very positive for both government and institutional adoption. Be that as it may, the crypto asset class, which is the newest of 5 great asset classes, of course, we think has taken some serious brand damage and is likely to take a while to recover from this. It's our view that the retail investors are likely to return in volume the longest way away, maybe a year away. The private equity and VCs are already back in a market and they're looking for distressed assets, with family offices and small institutional investors likely to be the next in line to arrive into this market and start purchasing. With this in mind, we thought we would discuss the investment world as seen through the hedge manager's eyes tonight. That's you, Mark. And to introduce exactly Mark's view and the view of Switzerland in this particular space. But before we do, let's have a little look at a group called Agecroft Partners, who have released their 14th annual prediction of the biggest trends in the hedge fund industry for 2023. Remember, these are predictions, but they've been doing this broadly for the last 7 years and are regularly broadcast on Bloomberg television. So we gather that gives extra credibility to their statement. So these are what they think are the following 8 big movers in the industry. So the first one is they expect there's going to be an increase in returns for diversified hedge fund portfolios. Okay. Second is an increase in demand for strategies with excess collateral. So most people associate rising interest rates with declining asset values. In fixed income markets, there's an inverse relationship between interest rates and bond values. So they're expecting over-collateralized investments to be very popular. They think that there's going to be a period of redefining of risk. With interest rates expected to continue to rise, coupled with a moderate recession in 2023, the probability of performance tail risk increases in their view. This will cause many investors to redefine how they view and measure risk. They think there's going to be greater alpha due to higher volatility. That makes sense. Capital markets experienced a large increase in volatility in 2022 due to the economic and political uncertainty, which we expect to continue throughout 2023. That we, of course, is Agecroft Partners. This should make it easier for managers to outperform passive benchmarks as larger price movements help skilled hedge fund managers add value through security selection. They think that there's going to be continued high concentration of net inflows into a small percentage of managers. In other words, the largest brands in the hedge fund industry. And interesting enough, they're then saying that the smaller managers will outperform those larger managers. One of the biggest issues within the hedge fund industry is that high concentrations of flows to the largest managers with the strongest brands. This causes many of these managers to inflate well past the optimal level where they can maximize the return on their investors. Now, this is a good pitch for us because we're both fund managers in smaller funds, but this is a third-party view of this. They become larger and increasingly add these large issues in regards to their returns. And the smaller mid-sized managers then have a competitive position. They can become more nimble and they tend to generate more meaningful alpha from less efficient price areas on the marketplace. They also think there's going to be a decline in the number of hedge fund organizations. One of the things they define is they said the hedge fund industry is very Darwinian and is constantly evolving. Due to increasingly competitive environment, they expect the industry to consolidate with fewer hedge fund startups and more hedge funds closing through this year. The interesting thing is this, Mark. This is their final view. Remember, these are guys that are just analyzing the hedge fund industry, no particular bent on anything. They're looking at the entire industry as a whole. But point number 8 is a standalone point about blockchain technology. And it says here that many people have lost faith in cryptocurrencies due to high-profile theft, fraud, and bankruptcies within the industry, which has caused pricing to implode. It certainly has. We expect modest, if any, asset flows into this sector in 2023, but remain bullish in the long term. The industry is still in its infancy and will continue to experience tremendous innovation, evolution, and exponential growth over the next decade. There's currently 1,000 cryptocurrencies, along with numerous service providers in the industry. And of course, we know there's about 15,000 cryptocurrencies and crypto assets, but it'd be fair to say that 1,000 are the largest ones. In fact, it's interesting to note that the CCI 30, broadly the top 30 are about 85% of the market capitalization. The potential and investment opportunities in blockchain technology goes well beyond cryptocurrencies alone. Individuals who can effectively evaluate the landscape, understand how the market is evolving, and determine who will be the future leaders in the industry will be highly successful. Hedge funds will play a much larger role in the industry once security and operational issues improve. correlations between cryptocurrencies and other asset classes decouple. We look forward to that day. And as the future markets are expanded into blockchain opportunities. Mark, that is kind of a fairly large mouthful of where we're starting, saying that he's expecting numerous hedge funds to drop out of the marketplace, larger hedge funds to grow larger, best returns to be out of small hedge funds, but a great, interesting review of where they think blockchain technology is going. Maybe you give us a little bit of a background about who you are, what you're doing with BFI and Alt Alpha strategy, and then let's get some of your views on what we just discussed then.
Sounds great, Derek. So yeah, let me start off with BFI, the logo you see in the back, giving you all a brief overview. So we're a wealth management and technology group, all out of Switzerland, been around for about 30 years. And we have an array of different things that we cover, which also allows us to have, different viewpoints. So we're not just, only crypto or only one thing. So we have wealth management services where we, for example, service the US markets. Also here we're looking at, different markets that we're working with together. But we also have a physical precious metals company that just works with bars and coins, all kind of knock on gold, very physical with vaults and everything you can imagine. But then we also have our fund services, and that's also like one of the reasons, why we're talking is there we have three different funds, fund strategies currently, one being our digital assets, crypto fund of fund, we're investing in other funds. But then we also have a traditional fund of fund. So also there, seeing different viewpoints where we invest, in long, short equities, commodity traders, volatility funds, et cetera, in the traditional world. And then we also have a precious metals, again, a physical gold fund. We're actually using blockchain technology, kind of the last point when it also comes to use cases, to provide provenance of the underlying bars in the fund, basically showing, know your asset, where are these things coming from, really now deploying this technology. And that's kind of like on the finance side, our activity. And then we also have a blockchain company that specifically, takes care of this provenance tracking within the commodity sector, specifically gold, because you might not know, but Switzerland, among a few things, is also one of the quote unquote hidden champions when it comes to gold. Some of the largest refiners in the world here, a lot of gold trades are going through. I don't know if you knew that, but so that's also why this has a very special role in our economy as well when it comes to import export being one of the leading products. And so that's kind of the BFI group, and then these funds are called our Alt Alpha funds, just for also people to connect the different names and brands. And briefly talking about myself, I've actually been with BFI now for 10 years in aggregation.
Right.
Had the chance to go through the different, sectors. I was in physical precious metals trading, asset management, now on the fund side. But then after a while, I had also decided I want to see something different. And by mere luck and coincidence and chance, I ended up in tech, first working for Facebook, then working for Google. And these were also experiences which for me were then now coming, for example, for the digital space. It's a nice intersection. Understanding a bit, what the finance world is talking about, also a lot of the concerns, while at the same time, understanding when these technologists, they come and they just want to build, they want to move fast, they just want to go out. And or at times a bit more creative, one could say. Obviously, at times a bit too creative. We've also seen that. And that's a bit briefly, on my side from BFI, and a short background on my person.
Hey, Mark, you are just the right person to speak to today, because what you're talking about there is you're talking about the most traditional stores of wealth. You're talking about traditional investments in equity market space. And now you're talking about investments in alternatives such as digital assets. That's a very broad spectrum along the way. Can I ask you a question out of the blue here? I apologize for this.
Go ahead.
You're dealing with gold, which, yes, I knew Switzerland has a lot of gold. In fact, I'm assuming that occasionally when I land in Zurich or Geneva, that maybe underneath the runway, there's large vaults full of gold. But maybe I'm just imagining that. But there's certainly a lot of gold in Switzerland. But there's this extraordinary debate between Bitcoin, the value of its algorithm, Metcalfe's law, the number of people utilizing it, its fungibility, et cetera, versus tradition of gold. And you're digitizing gold and validating it through blockchains. How do you see that juxtaposition, that position between the two differences there? And how do you possibly advise people on, obviously whether they should have mostly heavy gold, so to speak, heavy investment in gold, or whether they would have a better speculative future in Bitcoin? How do you look at that?
So one thing, in the past, as I mentioned, since I worked in physical precious metals, at times, but also there from my background, actually, my two papers I wrote in university. One was about empirical drivers, gold forward prices, and the other one on exploiting blockchain technology in financial services. And so, just as a opposing view when it comes to that, I'm working with, gold bugs, but also then with Bitcoin maximalists. And me now personally talking, I don't see the merit in either camps of the extreme of only having, one thing or only the other. And I don't know if you or your audience, read the book Bitcoin Standard, but it's a very interesting book where as the title might lead you onto something different, but if you read it, I think maybe 80% of the book, it talks about gold, it talks about sound money, which is also another important concept. And so, to the point, I think if you look at these two camps, there is so much agreement when it comes to the problems in the current, fiat system, where basically the government can just print as much money as they want, this loose monetary policy, where there was a phase where we were I think the world or many people believed, hey, we can just print ourselves out of this trouble.
Yes.
We're now seeing, okay, that doesn't work, it backfires. So there's a lot of agreement with these two camps. However, then when it comes to, okay, what is the solution? That's where then, where the thoughts then differ. One go for gold, one go for Bitcoin. Now, how to balance it with clients? Obviously, it very much depends on on the clients themselves, on the circumstances. And often these are groups where there's so much emotional attachment also, vested into something that it can become hard. Now, talking to myself, I have both. I have, physical Volgars, the coins, but I also have digital assets, obviously. I see worth and value in both. Gold on the one, it's something that has, as a sound money form, has been so long within the world, and has really been able to establish itself, talking about Lindy effect and the like. It's there. You can't kill this thing just tomorrow, on the one hand. However, also it has limitations. And, these limitations we're seeing now, the world where we have, the globalization, digitalization, sending the gold bar from A to B. And, our team, I sit here with the gold team, it's a pain in the bum. You're working with physical gold, you're working with customs. And so here being able to send Bitcoin over the internet, that is something that has become suddenly much more interesting. And when I look at Bitcoin, it's not only this narrative of store of value that is very much trivial, but I think it's interesting on the infrastructure side, where suddenly Bitcoin being the largest decentralized monetary network running on the internet, where suddenly we're, up to now, when we wanted to send money, we always had to send, think about railway tracks via the banks. We had to send money from A to B, which also, especially foreign, can also be a pain at times. Now, suddenly you have the opportunity to use the internet, the Bitcoin rail, so to speak, to send money and to just use as a railway track. Let's say Swiss francs FX into Bitcoin. I send it over to US, do another FX into dollar, and I send dollars, I send Swiss francs, my counterparty receives dollars, use the Bitcoin network, but might not even be aware of it. For example, the works of Jack Muller from Strike. And so that being said, I didn't give you a clear answer. How do I solve it? It very much depends, unfortunately, but that's kind of the differences when I look at it. Whereas the other, I also see more this infrastructure aspect, which is more forward-looking in the future, that still has a way to go, but I consider very interesting.
Hey, Mark, the other interesting thing is I regularly say on this show, and that is we look at the whole world of what it's like now, and we extrapolate that out into the future. And that's we. And as much as I like to think of myself as a very young man, I'm not 25 and I'm not Generation C, in other words, Generation Crypto. Do you think that generation in 10 or 15 years' time is going to want to have gold bars, or do you think they're going to want to have digital assets?
It's definitely a tough call, because I think one thing, physical gold, also there's this, actually recently, again, held some coins, and there is a certain magic about it, which is maybe hard to explain. And, again, there is a reason why it's been around for so long. However, it is so, if now with the mobile phone and just also the last 5-10 years, how internet, smartphones, they have changed how we as human beings interact a lot. And so that was also like where I work Facebook or Google.
Yes.
I worked a lot on this change, and this has been extremely rapid. And, you know, while a lot of people think internet is tapped out, I don't see that at all. I mean, with the internet itself, we're only starting to get going, because in 2017, the amount I had to run around as Facebook and talk about the internet mobile first is almost laughable, you know, now 5 years later. But it's going to show things, you know, move so quickly, like checks, you know, physical, like checks, writing piece of paper that happened in the US, I'd still get it. And I think a lot of
they still use checks in the US. In Australia, I haven't seen a check. Literally, honestly, I haven't seen a check for 7 years. I haven't seen one, let alone utilize one.
I've never seen one. I mean, obviously, the systems are different, but you know, it really goes there to show where, the mobile, the role that the mobile phone plays, that internet constant connectivity. Just thinking about how cheap internet suddenly has become. Obviously, I know like many places still have a way to go. But I remember Switzerland, we had internet on my phone, and my dad for the first time took my mom's phone to go on the internet to look at Harley Davidson. She got an insane bill. You know, the times really changed in adaptation. So I guess I think I just wouldn't write something off that has like gold that has been around for such a long time. I wouldn't write it off. But it's definitely hard to say how, you know, the next generation will interact. And, you know, the last point here, it's funny that, you know, a lot of my quote unquote crypto friends who are, you know, all in, Degans, you know, all these slang words, 99%. We recently also had an event where we showed all our funds, and they said, you know what, Mark, maybe some physical gold wouldn't be that bad, because these volatility swings are also something you can't do, you know, forever.
That's right. I think the object of this is that, of course, we don't give investment advice on the show. We never have, nor do our guests. However, diversification is reasonable advice. And that's an obvious outcome here. What's interesting, though, of course, Mark, is the top 20 users of cryptocurrency broadly and they do this calculation by utilization, not speculation, but broadly number one is Vietnam last year, September 21. So it'll be interesting to see what the numbers come through. And number two is India. I expect India will outpace Vietnam. And then you look in the top 10, and number 8 is China. I love that. China, where cryptocurrencies are banned. They're the 8th biggest user in the world, right? Perfect. You know, Australia doesn't rank in the top 20, but in the top 10, Ukraine and Russia rank. And the reason why, I would argue it's hard to take $20 million across the border in gold. You just don't have the pocket size or strength to do it, but you sure as hell can with the likes of Bitcoin. So this mobility aspect of it is going to have its own role to play in the future. And of course, when you see things such as, you know, countries looking at utilizing Bitcoin as part of their collateral, as part of their financial systems, you know, such as El Salvador passing a law to utilize Bitcoin as for bond issuance. It's really interesting how that might play through, which is a little bit of a throwback on where we were in, you know, all the way up until the 1970s when gold was, you know, the gold standard in the US. So these are our thoughts. But what are your thoughts about what the Swiss funds and Swiss investors, you know, have a view now in the world of crypto assets and cryptocurrencies and this new digital asset space? What is their view now?
So here, and now, you know, we're starting with our view. It's in the long term, we're still, and this is really like the first separation when it comes to blockchain as a technology, you know. And a technology that underpins a lot, we're very bullish there in the long run. We can really see that moving forward. And that's something also when you're talking with people, it's very interesting how you phrase things. You know, do I call it digital assets? Do I call it cryptocurrencies? Do I call it tokens? Suddenly it completely shifts the sentiment, albeit we might be talking about the same thing. Yes. So maybe just, you know, throwing it out there, that's something that this industry hasn't yet solved. And at time it's quite a pain and a mess, because we're all talking about other things. That's why I'm underpinning its blockchain technology. I think is very interesting. Cryptocurrencies really out of the payment infrastructure side are also interesting. Let's say, you know, very specifically Bitcoin. However, you know, that's just a small segment of a much larger pie that's being built. Yes. Be it decentralized finance, be it gaming, be it sports and entertainment. There's so many things that are being built there that are, very interesting. And so their long run, I think many actors and players are still bullish. Now, in the short run, I think things are going to be a bit more difficult. Why? On the one hand, we had a lot of institutional investors, be it smaller banks, asset managers, family office, some, larger banks, they were kind of like almost on that tipping point to go in.
Yes, I agree.
And then, we already in last summer, we had this Luna, Three Arrow Capital debacle. And now FTX happened. I think FTX hit so much harder home because, FTX had, all these accolades of, you had all these former presidents on board, you had these superstars there, you had, you just had all that shine and rise, all these signals that provide a lot of people with trust, that they're on arenas, etc. And that now shows out to be, very falsely misplaced. We're looking here at massive proportions of fraud and also trust erosion. So I think like these, this past year, which was very troubling, and a lot of bad things happened, has now been something that has been putting a lot of these institutions off. Also, just think about often the people who are driving these institutions, there are few of them. I talk with a lot of them, they're few in number. Yes. They already have an uphill battle, and then these things happen. Well, both of you heard it. I told you so. These are. Yes. I told you this was rubbish. I told you this was all full of scam. And so this is definitely something that in the short run is hurting the sector. And we're. I just came from the crypto finance conference St. Moritz, the CFC St. Moritz, where a lot of the big institutional players gathered and discussed. And it was ironic to a certain degree that this industry, we were talking a lot about building trust. Albeit, the blockchain narrative is, this trustless, permissionless. So we're going back to the roots. We have to build trust. And that is why long run still bullish, but look, there's still more work to do. And yeah, I think definitely it is building back trust is going to be one of those things.
Yes. Hey, Mark, we interviewed Roel Powell a little while ago, and of course, Roel is, a very well-known and colorful presenter in this particular space. And I asked him the question, what do you think it'll take for the institutional investors to come back? And his answer was very simple and somewhat underwhelming. And that was, he said, for the price to go up. And so much of that's true, everyone's a doubter until they think they're missing out, and all of a sudden they become interested again. We're up to, nearly 28.5% rise since the 1st of January. A couple of questions. Do you think this will stay reasonably stable, or we'll see, a lot of change occur with that? Do you think if after 2 months or 3 months of fairly steady confidence in the market, that these people will start reconsidering their investment through, fear of missing out? Or do you think the educational gap between their understanding of what cryptocurrencies are, which is really securities, utility tokens, non-fungible tokens, etc., is going to still keep them away from investing in this space?
So I think on the one hand, education needs to continue, because the problem is, without education, you're always going to have a strong emotional reaction to either, FOMO, fear of missing out, here, take my money, or this is dead, this is all over. I had, within these last month, I had so many conversations with people like, now this is over, we're done here. This is never going to come back. And soon as there's a little price bump, relatively speaking to where we came from the tops, suddenly these talks of, I missed the dip. And so no, education must continue to move forward, because also here, let's talk about retail investors. Sure, there can be much more an emotional reaction to the market. However, for this market to really move, long term, where we think it will go and where it has to go, we need the institutional world to join in. And this world, it's not just going to be bumped by the price. Obviously, it helps, it moves more decisions forward. However, here, not only education, but also the regulatory aspect becomes important, where more clarity has to reside. And also, Switzerland, one of the things that this country has is regulatory clarity. we as asset managers and like our, financial market authority is doing, your well job by providing guys, this is what you can do, this is what you can't do. And obviously these are still things, that are work in progress, but this provides so much more help and clarity than just having a regulator that doesn't say anything. And that's, in many countries the case where people don't know, is this right? Is this wrong? So regulation needs to move forward as well in this space for these players to join the market. We have to continue to move on education and price. Actually just this morning, I talked with our Chief Investment Officer, Dirk, across the group about this. Yeah, there's been a rally, but we've been seeing now, brief rally across the board. And obviously the big question here is this the bull run or is this the bull trap? And while I just looked at Wall Street Journal this morning, and I know, news, you always have to watch out. There's a lot of noise, but I just scanned through the headlines and, things don't look that great. Obviously, as a human, I'd wish everything would just turn around and, all the issues we have, they would be resolved and we'd be off to, a great living. But I believe, when we believe this year, it's going to be a more challenging market in the sense of also tapping church, one of the points you mentioned from the report, that we're going to see these swings where volatility and, the alpha opportunities there, where for a buy and hold, kind of beta index approach, it's going to be much tougher, to sustain growth. Whereas the last, decade, you bought an index and, you were good. Yes. Things were just going up, and we're entering here and like now a new world where this is going to be much more difficult. So also here, with digital assets, I personally don't think this is not going to go, straight up into the moon from here without any bumps. This is digital assets, and we haven't ventured a more volatile world, and so it's going to be a bumpy road.
And I was in Switzerland to begin with in this space in 2017, attending conferences there, and it was in Zurich. And at the time, there was active, and it was even probably 2 years old at least, work between lawyers specializing in this space and the government itself, looking towards building institutional support through regulations. That's come a long way, I would imagine, since 2017. Do you think Switzerland is well regulated now, that this particular space would be a better space to invest in out of Switzerland?
Yes, so we see a lot of interest there from people abroad, because our regulators, like early on, they've been working on it. And this is not only on the federal level, but this is also on the state level. And for those people who don't know, Switzerland, we have a decentralized government also, where actually when it comes to taxes and many rules, states are kind of in competition with each other. So, Crypto Valley, which is kind of the nickname of Zug, has been able to garner a lot of this interest. And suddenly Lugano, a city out of the south, is coming, like rushing to the attack with, like, for example, implementing Bitcoin as a payment rail for a lot of local stores, because they also now want to attract business. So you have the federal and like the local canton level, which are working on the one end here to provide regulation, to provide, more clarity for businesses to operate. And at the same time, when it comes to investments, we have, hybrid crypto banks, so to say. You have players such as, a Signum, a Seba, or also, Swissquote player that actually offer both. And this now, especially with things such as FTX, suddenly people realize it's actually worth something having an actual bank with a banking license in Switzerland that has a strong tradition in this space, matched with technical capability in offering storage for your digital assets. Because I know this mantra, not your keys, not your cheese, is great. But honestly, if you have, 50, 100 million or more, I think it's quite stressful if you're managing the key. So that there's always a pro and a con to everything in life. So yes, we're definitely seeing a rising interest and requests for people to find home here in Switzerland for their Bitcoin, Ether, whatever it may be.
So, there's been sort of a thought, and possibly at the CFC conference in St. Moritz, you may have seen this discussed. And this is wrapping around sort of, a perception that there's a cleansing of the ecosystem of the projects and funds that have occurred, and that this is a good thing for the space. We certainly have made that comment along the way. So you get rid of sort of the absurd, say, play to earn gaming that didn't make economic sense in this particular case, in some cases, or you get rid of really crazy cryptocurrencies, although Cebu Inu is still there. Hey, that's just my view. And you were then able to turn around and start making people sort of focus on what they think are the major use cases. I was watching or reading Messari's report that comes out each year. It's about 168 pages long, and the fellow that writes it is a charming narrator. And he made the view that their view is investing in the picks and shovels of the world still, which is layer 1 protocols, layer 2, and zero knowledge proof. Because this is the infrastructure that everything gets built on, including all of that which is associated with security tokens, utility tokens, and then of course, future Web 3.0 worlds. So are the Swiss investors looking that far forward into the space, or are they still determining really what is a layer 1 protocol? And should I invest in that? Firstly, what's their knowledge base in the area, do you think? And if the knowledge base is there, are they looking through and believing that it is this picks and shovel infrastructure as their first investment go-to? Or are they actually going an extra step further and going, I want to talk about the metaverse and Web 3.0?
So I think, well, first off, education, obviously, it's going to depend very much. But generally speaking, from what I'm seeing, and funny enough, because I just yesterday got an email from an investor exactly referencing picks and shovels. And so I think that picks and shovels interest is absolutely there. As I said at the beginning, also our interest, we want to have a broader investment in the ecosystem, because it's also the point now to say who are going to be the big winners. It's very hard. But however, if you can focus on, the ecosystem, the things that are required, the infrastructure, that also provides, much a better way to diversify the investment. And, as the topic before, diversification is definitely something that we see here is key, not only on the investment theses, but also as we're seeing now, your partners, where, your assets being held, traded, custody, et cetera. So we definitely see that, interest there on the infrastructure side. Taking it a level further, I think when it comes to, Web3 that you mentioned, also that was, interest that was popping up, like, for example, in St. Moritz, CFC, people are interested in Web3. However, there, I guess also on the education side, again, with one conversation said it's super interesting in Web3, but so what is this actually?
Yes.
What does this entail? Like, what is blockchain? What is VR? What is AR? Like, I know these are very sexy terms right now, Web3, to throw it out there. But like the thing in the blockchain, it's really, what are we actually talking about? And how are we addressing these things? Does this also an equity investment in Facebook, because they're a massive player, or Meta, I should say, in the whole VR space. So there's so many questions where, again, through education, we have to work on it. But yes, it's definitely a narrative or a storyline that draws interest. But I do believe, especially on the Swiss side, and like we culturally a bit more, conservative at times, if I may say so, generally speaking. We're not, known for being the biggest gung-ho people, which I guess is also a reason why people like us when it comes to custody and the like. You don't like to have cowboys on that end. But
Mark, you say that you're conservative, and I understand that. But at the same time, Zug is there. At the same time, L1 is there, which is a large investment VC company with which actually has not just institutional, but governmental monies in it. And so when you're looking at that, clearly there's a section in Switzerland which is looking towards the future. And they've got a bigger view of things than just the base conservative investment strategies. Is that fair to say?
Absolutely. No, it's definitely there, I guess, just in, in proportion to everything else.
Yes.
This is still small.
Yes.
There's still, but that's also a good thing. If it were already big, then, well, all the alpha and the opportunity would have been already eroded.
Yes, perfectly said. I think it's extremely important. People will often look at this and go, well, this is all about risk. Well, risk is the price you pay for reward. It's that simple. You don't want to pay any price, you don't get any reward.
No free lunch.
No free lunch, exactly, which is a pity. So one of the things you talked about with CFC is this discussion about trust in the ecosystem. Of course, this is very ironic because you're talking about a trustless distributed environment. Yet what we saw in 2022, of course, was an environment that the centralized finance collapsed in trust on a regular basis through the famous three arrows, through Voyager, through Celsius, and then through a 1-2 punch through FTX and the contagion associated with that. They're all centralized finance that has been broken of trust. Is it understood at CFC that in fact this trustless environment, decentralized finance that was trading algorithms and swapping tokens on a constant basis, et cetera, was working faultlessly well right through this breakdown of trust? Is that an understood area there, or do they just bundle in the entire sector and say we can't trust it?
No, thanks. So within that group, the understanding is there. However, the question is, how is the outside world perception, so to speak?
Yes.
And I think Senator Loomis from the US said something, to the effect of, when it comes to FTX, that it's not the blockchain or the crypto sector that's standing here on trial. What's standing at trial here is, centralized organization, fraudulent human activity. And, to your point, I think that's really that understanding that, CeFi versus DeFi, where, a lot of this, and these were humans. And, this is not the first time that fraud activities happen. This has happened in other sectors before, and it's definitely not going to be the last time, because we're humans. Greed comes into play. There's so many things that come together. And I think, but that is something that obviously, if you look at a lot of the headlines and, coming out of the sector, clickbaiting, engagement phishing, these are all things you just like to mush together, because who likes, a well-balanced headline? It's not going to sell. It's not going to generate clicks. So we're just going to hammer the whole industry. And I think, so that is definitely something where, on the one hand, the industry, we have to own up on mistakes that were made very, very clearly, but also, clearly separate out that then or that these are fraudulent people. We'll never get this out, but we're not going to get this out in any industry. It's just how, we humans are, unfortunately.
Yes. Hey, Mark, was it Matt Damon that said fortune favors the bold? Was it he that was on the advert? So whoever it was that stood up and said fortune favors the bold, I think it should be altered. It should be fortune favors the informed.
Yes, it's no, it's definitely so. I mean, that's also why the point of education, there's still a long way we have to go. We have to, and podcasts like this, or other conversations, I think also important, balanced conversations where, there are pros, there are cons. It's not just one hype train, everything going to the up and, undisputably, we're going to the moon, but it's also not the other side where everything is just terrible. I think, for me, technology as money, they're both neutral, which basically means you can use them for good or for bad. I mean, think about, how many wars were financed with dollars, on the one hand, but on the other hand, how many hospitals were built, how much research was funded. So I think that's also where we just have to understand where then we as humans, we're the ones that make the difference and are able to, steer the ship in one way or the other.
We do get very accustomed to our environment, the mechanisms and tools they operate in. And we also make assumptions, this lineal assumption that everywhere is the same. Well, I'll tell you what, sure as hell isn't everywhere the same as Switzerland, which is immaculate, organized well, and operates effectively with good regulations. So Zimbabwe not doing so good. And this is the point. It's not a level playing field. It's not all the same. The demand for digital assets, or the ability to do digital currency transactions across the world at speed in microtransactions, is a lot more important maybe for somebody that's operating out of an Indian village than they are operating out of Zurich. And so we may well see that a lot of this adoption of currencies is going to occur out of these developing countries in what is often referred to as the bankless group. I think it's referred to, those that aren't banked around the world. And so that's something we need to consider from I think a user-based point of view. And the other statement you made is so true, and that is that we tend to bundle things together. We're busy. We don't have a lot of time. We don't have a lot of bandwidth to understand this. So cryptocurrencies must be currencies. Well, they're not. As you and I know, they're just not. They're securities. They're utility tokens. They're non-fungible tokens. They're Web 3.0 structures. They are transactions of monies. They're stores of wealth. These are all very different things. They're just digitally reflected in value, like digital gold. That doesn't mean that the gold is a currency. It can be used as, that's fairly clumsy as one, like Bitcoin is frankly reasonably clumsy as a currency too, because it's slow. But knowledge is the most important thing here, I think, to get this broad understanding for that. And I hope that the institutional investors, the hedge fund managers of Switzerland, I know so, it's not just hope, it's know so, will want to learn more and more about this space, because it really is going to be a space that impacts them, I think, in due course. And it's just a matter of time. It was interesting, a statement from the managing director of MY Mellon, I think it is, and he turned around and made this wonderful statement. He turned around and said, denying cryptocurrencies is like saying, I'm going to stay with paper. I'm not interested in using computers.
You raised such a good point. I mean, multiple, to your first point is really understanding that, yes, we're all sitting, we're lucky enough that we have this privileged view where we can look at the space as speculation, for many, but then understanding that in countries where there are currency controls, where there's rampant inflation, where there's so many, crippling governments, where suddenly, it's not speculation, it's financial inclusion, it's suddenly
Yes.
Opportunity. It's just, completely different standpoint. And to your point on bank, I can't remember the exact numbers, but it's still massive, the amount of people that are unbanked. And
Yes.
now thinking, also at the same time, technological development, smartphone, Android phones with $50, suddenly, you have a phone where you can start to connect. And then you have, Elon Musk with his Starlink, where suddenly,
Yes.
interest coverage is also increasing. So there's so many things moving in tandem where, yes, I think, a lot of us, we underestimate that because we're not affected. And look, I'm not going to be buying my coffee with Bitcoin or whatnot. Hey, I want to, keep that, but I'm going to use Swiss franc. It works great for me, but I'm fortunate. I'm lucky. Many are not.
Yes.
And I think that's the one side, exactly as you point out. And the other side, I mean, what again I see in Switzerland, I also, participate in courses where I, kind of educate a crowd, and it's so funny for me to see. Then I have, bankers from the big banks come in who are interested. Then I have people from the government, from like the tax side, or people from the Post, or reporters. They're all interested. They want to learn, and at times, obviously, you get very critical questions. But I think that's the openness to learn, to understand, and I think also, what so many people have a hard time understanding, like asking Bitcoin and gold. For many people, this is conflicting thought. Why not
Yes.
hold both of them together? Why can't they coexist? Why
Yes.
doesn't, one have a role and the other has, in different scenario? But also the same thing as, reserve the right to be, to change your mind. It took me years of discussion with my father, from, very, very tough discussion. So for many dinner conversations, and now he's on board, and, now, he also like metaverse, NFTs. But it's a thing where, people also, and I also changed my opinions. If I'm presented with the new facts, the world has changed, then I will readjust. I will look at the new facts where we stand. And I think those are a lot of things where at least my message would be to many, if you now think this is rubbish, this sector, well, then just, maybe you'll be open to change your mind in 1 or 2 years or whatnot.
Hey, Mark, fortune favors the informed. That's our new slogan, I think. Hey,
yeah, very good to the point.
We're coming to the end. And so an opportunity maybe if someone wants to reach out and contact you or ask some questions, how might they do that, Mark?
So on the one hand, you have our group website, which is www.bficapital.com. From there, it leads you to all other things and also lead you to me. And, me directly, you can just find Mark Seidel. I'm on LinkedIn, or my handle at Twitter is at Mark Seidel. So those are ways, feel free to reach out, have a chat. And also thank you for you, Derek, for having me on also as your first guest. Heading into new year, and also, a thank you for your educational work you're doing here, fighting the good fight, so to speak, in the Asian region down there. We're trying, to hold the fort here in Switzerland and Europe. Also, thanks for that very much, and the conversation.
Delighted. No, absolutely delighted. And I must say, so Mark Witten, our CIO, will soon be in Switzerland again, and it's his intention to spend a lot more time there, in fact, move there. And we find Switzerland to be fascinating because the level of sophistication is extraordinary. Yes, they're conservative, but they are highly educated and they are willing and interested in learning in most cases. And I think that's a good thing. So, we look forward to hopefully catching up with you again. I'll be back there in June and we might have an opportunity of seeing each other again. For the time being, thank you so much for your time and your informed views of things. And we look forward to catching up again.
Thanks so much, Derek, and looking forward to meeting you again. Have a great day.
We hope you enjoyed our weekly conversation. If you have any questions, comments, or suggested topics, please contact Nitin Gower or myself on the emails displayed here or via our LinkedIn profiles. Feel free to subscribe and share with like-minded friends. Stay well, inquisitive, and engaged. See you next week.